Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we are going to be doing a bit of a US stock market roundup today because we're looking at both the SPY, which is our proxy for the S&P 500, and we're also looking at the NASDAQ 100 cash market, the NDX. I feel it's necessary to include both in today's video because we have conflicting information. You know, we have a bearish count in the NASDAQ. We have a bullish count in the SPY. Both are still currently intact and working in opposite directions. So we are at a bit of a crossroads. Occasionally you end up in this kind of no man's land where you might have valid counts in both directions and you're just waiting for some kind of decisive move to clarify what the hell's going on. Alright, so quick reminder of where we are on the SPY. We're here on the day time frame in arithmetic scale, and we're following the primary wave count up into primary 3 at the top of the channel, primary 4 at the bottom of the channel, excuse me, and now we're in this fifth of the fifth wave. Alright, so ever since we bottomed in primary wave 4 in October last year, we've been working our way up in 5 intermediate waves and 5 minor waves inside of the fifth intermediate wave. So let's come over and have a look at more recent price data. We're going to come down to the 1 hour. Zoom out a bit. Okay, and this is the minor wave count into the intermediate wave count, into the primary wave count, into the cycle wave count as I see it currently in the SPY, like this. Still calling for a new all-time high. As I have been for a long time, my suspicion has been that we will top out in the summer. I've been saying that for months. However, my suspicion is also that the NASDAQ has topped and is leading the way down first. So we've ended up with divergent counts, and that's why we need to, I think today, look at both and call the levels, call the limits as when they're both still believable and legitimate. So here in the SPY we have no reason at the moment to suspect a bearish count. We can count it bearishly, but we've been given no evidence yet. We have our minor wave 1 or a minor wave 4 invalidation point at the top of our wave 1 still intact. We have a clean count of 1, 2, 3, 4, with the 3 being longer than the 1, so no fear of the minor 3 being the shortest. The minor 5 could extend longer than the 3 and still be legitimate. We've got what looks like an expanding flat pattern in the wave 4 here. And we are now seem to be pushing our way up into minor wave 5. So far with a minute wave 1 complete. Looking for some kind of 5 wave move like this. Got a deep, very deep 2. Okay. A bearish interpretation of this would be a 5 wave move down into 1, A, B, C coming up and stalling before the all-time high, before rolling over into a 2, rolling over into a 3 and collapsing. Okay. That is how you would have to interpret that bearishly. Like I said, for the meantime though, the bullish count is intact. We're very close to the all-time highs, just within a percent or two, and our targets are minor wave 1 from 4, so the length of minor wave from 1 here, to project from our minor wave 4. This is more common when you have a longer wave 3. Whether or not we've got a true extension in the 3, I'd argue on the side of no. So the this wave target doesn't have to be the wave 5 completion for a wave 5. The 5th could extend in this circumstance and actually become significantly larger. And if this is a minute wave 1-2 swing, it's pretty big. So maybe our wave 3 target is significantly higher, but we'll have to wait and see. Price data from the minute 2 has been really tricky to read, to be honest. You seem to get a nice impulsive move to here, and then we get a lot of chop. And if you were looking at that bearish count, you'd probably be looking at some kind of ending diagonal here. But I'm actually expecting to see a flat pattern come out of here, an ABC expanding flat. After we had this little zigzag in the 2, we get an ABC big time wasting 4 on the minuet level, which will push us up into minuet 5, into minute 3, don't know where, probably somewhere in between these two targets. The 4 will then have to come in on minute time frame, the invalidation point for that 4, as and when we make a new all-time high, because we want to see a nice clear 5-wave move up here, if possible, into the minute 3. Then we'd be right around our point of control here at 417.48. I'm just going to pop a tag. This is a bit preemptive. It's just to remind myself, you know, this will be the level that once we get a completed 3, we will not want to see our 4 come back beyond this level here. In the meantime, targets to the upside, -1 from 4 brings us to 431.06, and 61.8% the length of -1 and 3 together from 4 brings us to 433.69, and these are all viable targets for our 5th and final wave up. We don't have to go that high. All we have to technically do is just clear the previous all-time high, and we could call this a 5th wave. It wouldn't look very convincing with this huge 1 and huge 2. You'd have to squeeze 3, 4 and 5 in in a very tight space. So I think we should be giving the bullish count the benefit of the doubt that it's just going to continue to perform in a typical, you know, expected kind of Elliott wave, in a typical impulse wave, and we should just give it the benefit of the doubt. Like I said, that 3 could be significantly higher, which could potentially push the 5 higher, or keep it just beyond the 3. We don't know yet. So looking for a break of the all-time high to increase confidence in this bullish count, and that's what I say we're really looking for in the short term. Get through 422.84, see continued price action to the upside beyond the all-time high, and we can continue to interpret this bullishly. We have no reason to do otherwise at the moment. Right, so that's the Elliott wave count as I see it for the SPY, still looking bullish. I have doubts, I'll be honest. I had doubts we may have topped, but the thing is, if we have topped, we've had a really deep retracement. Not impossible. A wave 2 can retrace all the way up to 99.9% of the 1 and still be legit, but we are really stretching things from that point of view. So having said all of that, let's come over and start contradicting ourselves by looking at the NASDAQ, the NDX, where we are actually interpreting this bearishly. Now, what you have to think, well, you don't have to think, you can come up with your own reasoning. I think the logic for this count is that the NASDAQ it peaked first, is breaking down first, and is leading the way lower. This was very much the case we saw in the 2000 tech bubble, when the tech stocks of that era got very inflated, very far beyond valuations, and were the first to break down. The bubble this time has been very similar, driven by insane valuations, and I say insane, I don't care if you agree or disagree. I'm not saying any of these big tech companies are bad companies. They're all great companies, but that has nothing to do with how they're valued. They're all valued to the moon, far beyond even the greatest earnings reports, even the greatest profit margins could possibly justify. Okay, so that's just my opinion. You can disagree if you want. So I feel they're massively overpriced, and if they have rolled over, they've done it before the broader market. So that would explain our bearish interpretation here. So we're saying that instead of the minor wave 3 being up here and minor wave 4 being down here like in the SPY, with a minor wave 5 to come, that count was invalidated because we came back beyond what would have been our minor wave 1 back here. Yeah, we even came so far as to go through the minute wave 1, so we can't even justify minute wave stretching beyond our invalidation point. So the count got invalidated, and we had to start interpreting this bearishly. I have since come up with a bullish alternative for the NASDAQ, and we will look at that. We have to keep all options open. Excuse me. So the way I see this is 5 minor waves up, just peaking in the minor wave 5, literally just a few ticks, a couple of ticks beyond the 3rd on the minor wave, into the 5th intermediate, into the 5th primary, into the 5th cycle. We then put a diagonal in on the way down for a minor wave 1, and since then we've been working on a minor wave minute wave 2 retracement as an ABC. A, B, C. So we're saying in this case a running flat pattern, because we're counting 3 in the A, 3 in the B, and trying to count 5 in the C, which is getting a little tricky, to be honest, getting a little tricky to try and to do it neatly. We've got some issues with the way these candles have formed here, but we have come back into a bit of a death zone, you know, where there's a lot of fib confluence here. we've got the 161.8% extension of A from the B to find the C. Now this is in the cash market, which for Elliott wave counting is the one that matters. So this is a 1618 extension of A from the B. So this wave projected from here. This is a typical target for an extension in the C wave of a regular flat or of an expanding flat, or but not of a running flat, as a running flat obviously completes with a C relatively, well, not truncated, it completes where it should before where the A completed, but ignore that. Let's just focus on what we're looking at here. So 1618 extension we come to. This is also around the golden ratio, 61.8% retracement of this entire move down. So this 5 wave down, we've retraced around 61.8% of that move up. It snagged for a while and got tested, and we've kind of creeped around it, but it hasn't proven solid resistance. Not really. The 1618 we ticked to exactly and has since been broken, and we've come back down again, and we've also got the 786 up here as well. So all inside this red box we've got a lot of Fibonacci retracement and extension confluence going on around all these price levels. So the way to look at it, I guess, is if we're going to turn around and head lower, having done a 1-2, we have every excuse to do it now. To do it at this level under these conditions. We have every reason to flush down from here. If we are not going to reverse and head lower from here, with all of this on the bear side, that would make me very suspicious of this bearish interpretation if we continue to press higher into next week. And I think I'd have to pivot back bull again, I think, and then finally that bearish total invalidation of this bearish count would be back at the all-time high, 14. I mean, it's a little higher than that. I think it's around 14.073. I think the high was. So we're in the ballpark, 14.072. Can we get it up one more tick? Let's just say here then, 14.073 spot 92. These labels aren't to the tick precise, but I put them up so that you can see them clearly on your phone, on YouTube, or on your computer without having to squint at the side of the screen to find the highlighted numbers here in the price range. So to sum up the bearish count for the NASDAQ, we've topped, we're putting a wave 1 down, we're still in a wave 2 retracement, which has come to all the expected levels to find resistance, and it's come through some of them, like the 50 and the 61.8. We're hanging around in this area under bearish pressure. Very tricky to get a bullish count into here, into this back and forward sideways trough we've got going on. So if we're going to pivot lower, we've got every excuse to do it now, and if the bears can't get their act together with all this on their side and get a serious acceleration to the downside, then we've got to start having doubts about this bearish count, I think, because if you can't do it here, you know, if you can't perform under these conditions, then you're just never going to. So it's one of those things where I just feel if we're going to do it, we've got to do it soon. Okay, now it could be possible that we continue to stretch this, but that just becomes with the fact that we put a flat in rather than a zigzag. If we'd done a zigzag, 5, 3, and now we're in 5, I'd say, yeah, really deep retracement could be on the cards. But we're counting this as 3, 3, 5, right? Which really does mean that we're pushing the extension of the C. Now the C could come to 2618 or even further, but if it did, it would invalidate the high anyway, which means this entire bearish count would be wrong. So in regards to how the pattern looks so far, we are starting to stretch this C. Much higher, it's going to start to look ridiculous. You know, the problem we've got here is we can't get an impulse wave out of this anyway. You know, this still counts as 3 waves. This counts as 3 waves, which would be a corrective too. That's okay. This is kind of counting impulsively, but we can't really do anything with this nonsense here. It could be a 1-2, 1-2, 1-2 wave 3 extension about to absolutely explode. But very difficult to get a bullish count in this gapping 3 wave structure here. So difficult to get an impulse off of the low. So the whole thing counts still looks and structurally looks bearish. So come on, let's get going. Right, now, having said that, let's come over and have a look at the bullish interpretation for the NASDAQ. We're going to have to correct the chart here. I've got a couple of levels that need correcting, so we'll do that as I work. So this interprets things quite differently. This suggests that the intermediate 5 is still underway, and we have actually moved into the intermediate 5 now, and that the high could potentially be significantly further away than we expected. So let me show you what I mean. Inside of primary wave 4, right, we complete here in a zigzag, right, and now we start our intermediate wave up like this. And now I have to say, having had some time to look at this, I really quite like this now. I'm still primarily bearish on the NASDAQ until I'm proven otherwise. This is something I always say. I'm not calling tops or lows for fun or to be edgy. I'm doing it because that's what it looked like at the time. Okay, and now I'm looking at this bullish interpretation, and I love the alternation in this, in terms of this 5-wave intermediate move. Right, we get this zigzag in the 2, and then we get what I've looked at now as a running flat. So A, 3 waves move into an A, 3 wave move into a minor B, 5 waves into a minor C, staying within the channel. Okay, completing the 4 higher than what we concerned ourselves with the invalidation point, which we were within a Nat's ass of doing previously. This actually keeps the wave 4 significantly above the wave 1 invalidation point, and it has a long time consuming running flat as opposed to a zigzag in the 2, so nice alternation. So I have to be absolutely honest, from a Elliottician point of view, looking at the count here looks better than the bearish interpretation I've got. So by the end of next week, when we come to look at these things again, I would have probably made my mind up, because like I said, if the bears can't get their act together, and with all the confluence they've got here, if they can't thrust their way back down below this low, take us out of this channel and convince us that we're bearish, then this bullish interpretation will start to look more and more sound. So the things we need to update. Now we had here 61.8% of intermediate and primary of 1 and 3 from 4. So that, if you watched previous videos, that means that if we take the primary degree back here at the 3, if we take the whole length of the 1 and the 3, project it from a primary 4 here back in September 2020, we come to this target here at 14,191.77. If we took the 1 and the 3 and projected it from what we were saying was the 4 here, we got the same number, but we've now changed that because we're saying this wasn't the 4. We were always suspicious that the 4 came within a few ticks of the 1 of invalidation point. This 3-wave structure completes the 4 as an alternate to the zigzag, and it completes it significantly higher from the wave 4 invalidation, and therefore will push our intermediate interpretation of 1 and 3 from 4 higher as a finishing position. So what we're going to do is we're just going to get rid of the intermediate bit, leave the primary bit in, because that is still correct. That's still a primary wave degree target. But what we now need to do is project a higher intermediate wave target, which could extend further. So we're going to take the whole length of 3, and rather than projecting it from here at 12.1215, which was our initial proposal for a 4, we project it from the golden ratio extension of A from B to find C, and we got a golden ratio extension which is also perfect for a running flat, and therefore we now push that higher to this yellow line here, which is our 61.8% extension at intermediate time frame, and that gives us a higher target. So we're just going to pop a yellow line here excuse me, and we're going to lock that in place, and we're going to label this as well. Should I use text, or I'll use a call out? It's the same style, isn't it? So 61.8% of 1 and 3 from 4 intermediate. Okay, so that gives us a new target up here. We'll use our little price labels to replace this one, since I'm getting into the habit of using those more often. And here as well, we'll get rid of that. I said 94 there, so just bring that down. God, it's very difficult to get it right in the right place. I'd have to come down to a smaller time frame and move it around, but that'll do, pig. So we'll leave it there. Alright, so as you can see, let's talk about one other thing I like about this bullish interpretation for a moment. If we take the length of our A, project it from our B, we're at the top of the B, we come into the golden zone here between the 61.8 and the 65. So that's nice to see us finish right in this, right in the golden zone here, and then bounce. So bullish interpretation is we've done 1-2 intermediate. We've now completed 3-4 as a running flat, and we're now going 1-2 and extending in a 3 perhaps, because this is quite a high target now. You know, this puts potentially, we could go higher, we could go to the edge of the channel because the channel's still intact. But I think we should really drag that down to bring in those lows so there's no doubt about it. Lock it back in place. Bring down the 3 as well. Sorry, we should do that. We've got to have points of contact, which makes sense. So we've got the wave 2, this swing low here within the greater wave, intermediate wave 4, and the wave 4 completion, all on the bottom of the channel, which is nice. Moving up to the 3 to project to find the 5 puts us back up here above 15,003, around 15,400. We've got a 14,938 target here, which is the 61.8 extension of 1 and 3 from 4 in the intermediate time frame. So these are our targets we should be keeping our eye on at the moment. Okay. If the NASDAQ does not turn around and head south next week and take out the low, we want to see, really, let's just put one more target on the board then. We want to see our wave 1, our proposed wave 1 taken out. That's essential. If we're going to convince ourselves that we're in a 3 and we're heading lower, then we need to take out that wave 1 low. Because whether this is some kind of A, B, C, we haven't considered, or it is the 1, 2, 3 we're expecting, we have to come down there and take that out either way. So that's what we should be targeting and looking at as better. If you're a bear, you know, this is what you need to be saying. You want to see us get down below 12.9 excuse me, 66.03. So we'll lock that on the target as well. And I think that's it really, guys. There's not much else to talk about Elliott wave wise. Bearish interpretation of the NASDAQ, it should break down from here. If it doesn't, why isn't it? Is the question. I mean, we do have a phrase that we use in our Discord group called the FU push, and we all know what FU stands for, and it's the idea of the market pushing things to the limit, pushing against all likely odds, because that's going to screw the most people over, bulls and bears, the FU push. And this could still be on here. It's already done it in the S&P. And I just feel like if the NASDAQ continues pushing next week through these fib levels, then the SPY is going to make a new high, because we're in a % or 2 of it. So either the NASDAQ turns down now and heads down into a wave 3 and then accelerates, or we're likely all heading towards new all-time highs. That's how I see it. So let's look at our charts now, do some basic technical analysis before we wrap up here. I'm just going to save the chart, hide all of the count, come out to the weekly time frame, auto, and we're going to zoom right into the recent price action. We're going to bring up our exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, and 250 in green. Zoom out to get a little bit of perspective. We're going to bring up our indicators. We've got an RSI set to a 10 close with the red 70 level representing overbought and the green 30 level representing oversold. We have a MACD also set with a 10 for the short term moving average in blue and the 20 for the long term moving average in orange. Alright, so the weekly time frame above the 10, above the 20, above the 60, way off the 250, which isn't even in sight. This is the NDX we're looking at, just to be clear. It looks, for the meantime, bullishly intact. We've had the same old bearish divergence going back to September last year, where we've had high, lower high, another lower high now, even though we've had high, 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 high. So the basic technical setup still supports the bearish idea of bearish divergence, of weakening momentum, the market having topped, and we should just turn around from it and just nosedive. Okay, if the bearish count is correct, but we've yet to see that. Okay, so we've just got to be patient. If you're a bear, you've got your invalidation level, which is the previous high, and then it's a case of how far do we push? How far does the FU push take us back towards those highs? Like I said, I suspect any further push in the NDX is going to make the make the SPY make another high, which I think overall suggests higher pricing across the market. Right then, so MACD, still some bearish momentum here, some red bars on the histogram. Short-term moving average has crossed below the long-term moving average. Bearish divergence between this peak and this peak and this peak and this peak in price. Weakening momentum again. Momentum in the shorter term does seem to have cooled off its bearish inclination, but we haven't crossed over bullish yet either. So let's come down to the day time frame and see what we can see. Alright, so the same, we're basically looking at a similar setup. We're above the 10, above the 20, above the 60, having dragged the 10 back above the 60 exponential moving average, 10 crossing back above the 20 with the price above it. This is bullish in the short term. We did do a round trip on the daily time frame from overbought to oversold with a nice bounce taking us through neutral territory, not quite into overbought territory yet, but a pretty strong bounce. Okay, return to bullish momentum on the MACD on the daily time frame, some green bars here on the histogram, short term moving average crossing over the long term average, but it doesn't look particularly convincing. Convincing in price and relative strength, but not so convincing here in the MACD, also already starting to lose some steam. So we really are in a no man's land with the NASDAQ at the moment. Like I said, we've moved down in 5 ways, we've come back to a sticking point. Is this sticking point the top of the wave 2, or is it simply part of a further move up? Right, so that's where we're going to have to leave the technical analysis for the NDX. So let's come over and do the same for the SPY. Save a chart in case I accidentally delete anything. And then come back out to the weekly time frame. Bring up our moving averages, 10, 20, 60, 250. Bring up our indicators. Okay, and we're just going to zoom in on the most recent price data. Like this. Okay. So, what can we see? What can we see here? Above the 10, above the 20, above the 60, above the 250. Phenomenally it's phenomenally strong bullish rejections going on here on a weekly time frame. We come down, thrust in the sell, and then we race back up with a long wick, creating a huge hammer. We don't get a follow through, right, as in the next week being green. We don't get a bullish engulfing. We actually doji below the body of the previous week's candle, but we had another attempt to move lower, and it was once again rejected with a huge wick to the downside. We've now had follow through into a green bar for the green candle for the week. It looks bullish. Okay, from a technical and from a basic technical analysis perspective, it looks bullish. Okay, RSI, we don't have the same weaknesses on the weekly time frame in the SPY as we do in the NASDAQ. We don't have that bearish divergence. It's not there. We have a high and a higher high over the long term, high and a higher high in price. Right then, the MACD, what is the MACD telling us on the weekly time frame? We've just had a slight bearish crossover over the last couple of weeks with the blue moving average to 10 crossing over the 20, a little red bar of the histogram for the weekly time frame, but nothing to call a reversal with. Very little momentum there. So let's come down to the day time frame and see what we can see. Above the 10, 20, 60, 250 exponential moving averages, above our point of control here on the visible reference, 2 tests of the 60 and 2 rejections to move the price back higher. No round trip from overbought to oversold yet, but we got close, moved back into neutral territory. Crossover on the short over the long term moving average, some green bars appearing again, but now this is interesting. This is interesting. Unless we accelerate in a wave 3 extension, momentum is significantly weaker with the bearish divergence on the daily time frame from the 6th of April to the 7th of May. So this high here to this high here led to this breakdown. We've since bounced back up towards those highs, but RSI and MACD especially has not recovered to match price. So there was a bit of a turning point here in terms of a breakdown in more long-term momentum. Now that could be the signal that we're finally into a 5th wave and we push higher and build a divergence between this high and the future high before breaking down, or it could be something more significant, but we need price to confirm. So we're still hanging around in no man's land at the moment, guys. Excuse me, still got a little bit of a cough. Alright then, I think we're going to have to wrap it up there. I hope that's helped. I know it can't help that much since we're still calling different counts, but I hope we've clarified how to look at both of those counts, the levels we need to appreciate and keep our eyes on, and what we're looking for to confirm. Okay, so if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell icon to remain informed of future video releases, and leave us a comment in the comment section if you want to. It's totally up to you. Thank you as always to my Patreons. Your support is greatly appreciated, and all of your help and helping each other to check each other's work and counts on the Discord is really paying dividends and bringing up some great ideas. If you are interested in becoming a patron, there's a link in the description box below. Please, I would now beg you, please leave it until June the 1st or June the 2nd. You do not want to get charged for May and June back to back, because you will. Alright, so just leave it till the start of the month. And yeah, and if you're not following us yet on Twitter, there's a link to my Twitter feed in the description box below as well. Alright, so take care guys, and I'll be back with you next week. All the best. Bye bye.